Alright, everybody, welcome back. It is Tuesday, November 14th, 2023, here at PreciseAlgorithmTrading.com. And let's take a look at our automated trading systems first. This is our diamonds. I'm sorry, the Dow. It's an equivalent to the diamonds, or pretty close to the diamonds ETF, exchange traded fund. This is a futures contract. They're different in how they trade, the amount of leverage they have. This one's very leveraged. So, anyways, these things trade automatically, and that's what we're going to look at here. Is how it looked today. I think we only got one or two trades today, and they show up on this sheet. I show, for what it's worth, when you have TradeStation, you can look at all this detail and as much as you want on your own. There's all sorts of charts and graphs and specs, and anyways, the one I really focus on is the same one I look at every night with you all. It is really this win and loss category right here. So today we had two trades show up over here, the 11-14 trades, and one winner, one loser, and all this back and forth creates this equity curve. So, and when you add on the rest of the year, it actually looks lower left to upper right, looks pretty good, and I show those on the weekends. So, the Russell 2000 here, it didn't trade today. That's a trade from yesterday, I believe, the 13th. And it's right there, and it wasn't much to write home about. This is the NASDAQ, and I told you all yesterday. I said y'all again. Told you yesterday that we eliminated some trades in this whole system, and really it was just by tightening up some parameters. But it trades the same, all the same like internal things that happens to make a trade happen. But one of them we tightened up, and it eliminated quite a few trades. Like I think a quarter of them or thereabouts. And so what you end up with is the same equity curve with a little bit better results and a little less drawdown. And that's what I'm constantly trying to do. So this one, that was a heck of a win. Anyways, today's trading is down, but and you can see lately it's been sideways. But what we're waiting for is one of these pops, like this one here. So this is the trades from today, and there weren't as many. Don't pay attention to that first one there. When I highlighted that, I grabbed 13. So 11-14. There you go. All losers except two, and one was a winner and one was a break even, which you don't see very often on this thing. So, and like I say, at the end of the day, you're looking for a nicely upward sloping equity curve, and you have to just be able to, your account and your emotions have to be able to take this drawdown. Alright, next is the Thinkorswim, and we'll look at our charts. So the charts, the S&P 500 is the one we're looking at right here. Went up nicely today. Big bullish move. 1.91%. The Dow went up 1.43%. The Russell went up 5.44%. So we're up against this upper Bollinger Band now. We're above the third average true range. That's what that yellow mark right there is. And let's go actually look at this thing. So this is what we're looking at, and I've been pulling this up a little bit lately just to show you. But we're up above this third average true range. I didn't necessarily think we were going to get there that fast. So if you look back here, times when this has come out of a breakdown or even a break up like that, these didn't even get to the third average true range. This one did, and then immediately reversed. You can see these lagged for a little while before they got there, and when they actually hit it, they went beyond it a little bit. So now we're beyond it. Now the question is, are we going to push higher, or is this going to be a reason to maybe fill this gap? And once that happens, we'll see what happens. So we'll see where we go from there. You can see on this chart, and literally I'll take it back however many years it lets me. There. We're back to 2013. So we came up, hit that upper Bollinger Band, came off of it, came up to the Bollinger Band, walked up with it, came off of it, came back up, didn't even make it to the, I'm sorry, these aren't Bollinger Bands, they're Keltner channels. Came up to the second one, didn't even make it to the second one, and then we rallied and we pushed up through. So this is a little bit like what today looks like. Pulled down, continued up. So just giving you some idea. The real thing to point out is that it never stays above the Bollinger Band, that, I'm sorry, Keltner channel, that third average true range, for more than a little, I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9 that it walked up and through. 9 days. So back here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days. I don't even know that you want to count these. You know, this worked out really well because it continued to do the waves all the way up through there, and then it crashed. So anyways, I wanted to point out, now here was a big one where we came up to it, pulled back, came up to it, pulled back, and just continued until we got up there, and then pulled back for a little bit and continued. So obviously that's what we're always looking for if we're long the market. So we'll see where this one goes. And this works for DJI. Oh, look at that. It's above the same thing. RUT. Also above that band, but it sure looks like it's, you know, like it's got further to go. That's a big old Marubozu, full Marubozu candlestick, it looks like to me. And I'm going to put the Q's in here because I'm not exactly sure how to pull up COMP with the dates, but so same kind of thing there. If I go to the NASDAQ like this, yeah, there you go. It's up there above all those bands. So yeah, any minute now, when the rest of the market, the retail traders get in and they can't help themselves, they need to buy here, is when the market will tank it. Back to the mean, back to a 50% retracement of this probably most recent rally. That type of a move is what we're going to be watching for, and that could again be a pretty good buying opportunity. And you know, while we have only been half size through this, it's still good gains. So, and I'm taking trades off the table when I get to targets, and basically when I'm hitting liquidity, which you're coming into it here for what it's worth. And then we really want to buy back in when we hit supply. So here we go. The transports broke out of a sideways trending range and trading range, and this is the 50% line from a long time ago right there. So Still think we can hit that thing probably even tomorrow, but and then oil. Oil, come on oil. I thought I practiced this. There we go. Oil's coming up off the bottom. And the question is are we going to come back to the mean, or are we going to roll over and go a little bit lower from here? And based on the weekly chart over here, we'll see how this ATR trail line holds for the end of the week. This could be a nice buy area, or else it's just going to fall through. So we could do a little deeper dive there. Yeah, that certainly looks like it could be a supply area. So, okay. What else did I have for this group? Well, that's enough of that. Let's flip over and look at the bullish percent indexes and see what we've got. Alright, the industrials tacked on 5.56% more, and a green arrow, or green X. The NYA, 2 green X's and 12.4% up, very bullish under the hood. The transports, 2 green X's, 25% higher. Interesting. The NDX, sorry, I went backwards. Supposed to go to the SPX first. Might wonder why I do these in this order. 4 X's to the upside, up 16%. The reason is just because the SPX is a much larger, it's really the market to a lot of people, and it's the cross section of the 500 stocks that make up the market. Well, then I like to go from that to the 100 stocks that are the S&P 100 of the 500. That tacked on 2 X's for 8%, and then the NDX. Did we look at the Nasdaq? We did. Tacked on 2 X's, and then I compare that to the NDX because it's the Nasdaq 100. And we're up against that resistance area pretty strong, up 15.25%. So this is a really breakout volatile day. This is similar to like a crash up. You get those crashes down that everybody gets freaked out about. Well, this is a crash up that a lot of people get freaked out about. Then they want to start buying in up here at the top, and then they'll roll it over. And that's really what we're looking for, is opportunity to sell at the top and buy back in when it rolls over and starts to roll back up again. And with that, I hope that was helpful for you guys, and I hope everybody's enjoying this market climate. So until next time, we will talk to you later. Take care.